Hello everyone, this is Mazen Danaf, Principal Economist at Uber Freight and author of the Freight Economist reports. Over the last 30 days, we saw the market tightening significantly and spot rates rising to levels not seen since mid-2022. Some have prematurely called the market turn, while others were more cautious, attributing the increase solely to seasonality. During this time of the year, it's important to distinguish between seasonality and structural market movements that are driven by persistent supply and demand forces. To distinguish these two, we need to look at two indicators. First, the rate of change in spot rates. From between November and December, spot rates rose 15%. This is much greater than the typical 4 to 5% increase in rates that we expect during this time of the year, and points to some level of structural market tightening beyond seasonality. Second, rates surged about 10% year over year. Looking at year-over-year comps also strips out the seasonality effects and points to some level of structural market tightening as well. So what to expect next? Over the coming weeks, we expect rates to fall, driven by strong seasonal headwinds. However, it's important to watch the rate of declines and the year-over-year comparisons. If rates only fall slightly at a time when we expect them to fall sharply, this could still indicate market tightening on a seasonally adjusted basis. Also in the Freight Economist report, we cover major trends on the supply and demand sides. On the demand side, the Trump administration announced plans to purchase mortgage bonds and to allow home buyers to use their 401k savings for down payments. This could stimulate housing demand and boost freight volumes for furniture, appliances, and home supplies. These are sectors that have been stagnant over the last few years. On the supply side, we look at December's surge in tractor orders. Last year, these orders were running significantly below the levels we saw between 2022 and 2024. However, a 16% year-over-year surge in December could indicate returning carrier optimism in a market turn. While it's too early to call a market turn, various signs are indicating that the market is gradually tightening in the long term. Follow the Freight Economist report for more information.